right, Rick Santelli is standing by at the CME in Chicago. He's got some breaking inflation data that we've been waiting for. Rick, ahead of that, we are looking at the futures up. Dow up by about 135, the S&P up by 26. Take it away.
Yeah, and 10-year note yields are down double digits, down 10 basis points on the week. And here we go. Let's start out with the employment cost index. This is a fourth quarter number, very important, expecting up a number close to 1%, and that's where it arrives, up 0.9%. That would equal where we were in the second quarter of 24. To find a higher one, of course, you would go back to the first quarter when it was 1.2. So it isn't bad. In between, of course, we had 0.8, our last look. So hovering. Now, if you look at personal income, these are important numbers. December, last of 2024, comes in exactly as expected, up 0.4. If you look at the spending side, stronger, up 0.7. That's a couple tenths better than we were looking for. It equals where we were in September. It ends up being the basically tied for the highest number of the year. To find a higher number, you're going way, way back, Becky, to January of 23. Now, if we look at real spending adjusted for inflation, it's also better than expected, up 0.4. We're looking for up 0.3. Last look was up 0.3. Up 0.4 would be the best going back to September of last year. Now, here we're getting into the nitty-gritty, the PCE pricing components. We have 2 month-over-months, 2 year-over-year. On the pricing, month-over-month, up 0.3, exactly as expected. But 0.2 hotter than the rear view mirror. That is not a good number, and we have been at lower levels. We're at 0, 1/10. So these numbers are a little warmer than expected. We started out the year at up 0.4. Now, this is the second highest level on a month-over-month basis. If we go year-over-year, 2.6, also higher than the rearview mirror, which was 2.4. To find a higher number, you're going back to April when it was 2.7. We're equaling May, but now this is the 1-2. This is the third consecutive month that we have made no progress. In 3 running months, here's what we've done. 2.1, 2.3, 2.4, and now, of course, we have 2.6. If we go back to month over month, these are core numbers, up 0.2 as expected once again. 1/10 hotter than our last look at up 1/10. And maybe the most important number of all, in my opinion, the pricing index year-over-year core. 2.8 was our last look, 2.8 as expected. And if we look at SEP, it was 2.66, October 2.79, November 2.81. And here we are once again, and I'm not sure how they rounded it, 2.8. We could say it's equal, but we're really not making any progress here. You can see that interest rates have trickled up a little bit. In my opinion, the reason rates aren't going up more on this data, Becky, is because I think investors have gotten used to the notion that we are at a standstill with respect to large progress on the inflation front. We make little tweaks here and there, but for the most part, steady as she goes, not anywhere near on the year-over-year, 2%. And I'm starting to see some very, very late revisions coming across the wire on personal spending. Our last look moves up to 0.6, which, of course, leads into today's up 0.7. And on real spending adjusted for inflation, up 0.4 looked like an improvement, but last month's up 0.3 now moves up to up 0.5. No matter how you slice it, the numbers on income and spending don't paint the picture of an economy that's going anywhere south. It looks pretty solid. Pre-opening equities, they're holding up with green across the board. And as I said, right now we're at 453 on a 10-year, which just put us down 9 basis points on the week instead of down 10, up 1 on the session. Back to you.